Good evening, everyone. Thank God for today. It's another wonderful day, and you are welcome. Okay, without taking much of your time today, I just want to quickly rush and then explain one or two things about moving average, as you can use it to study the market trend, and at the same time use it to open a trade and when to close a trade. I'll just quickly explain two ways you can make money. One is long trade and the other one is short. It depends on your capital and how you want to study the market and follow up. Meanwhile, before I continue, if you are new to my channel, kindly click on the like button, share it, and also subscribe. And once you subscribe, don't forget to click on the notification bell so that you'll be notified the moment I drop another video. So without any further ado, let's go straight to it. Okay, yeah, like I said earlier, I'll explain moving average to us. Okay, from what you can see on my screen right now, I have moving average on my main chart and I have another on my indicator window 1. So what I'll do is that let me just delete those ones, then I'll explain how I trade with this moving average on my main chart. Okay, so click on this, then let me delete all this. Okay, fine. So the only one I need now is this moving average. Alright, so let me quickly explain the long trade that I said. I'll later show you this indicator, how the setting is like towards the end of this video. But before we do that, let me quickly explain. Okay, if you're on boom, be it 5 minutes or 1 minute, well, I advise you use higher time frame. Study the market before you go into the trade. Take for instance, take 30 minutes. As you can see, the candlesticks are somewhere higher above the moving average. This black moving average. As you can see, the candles are higher here, meaning the market is moving on upper trend. Meanwhile, it's tending to enter a reversal somewhere here. As you can see, the candlestick is now getting underneath from that point. Let me go back to 15-minute time frame to see. So you can see the same thing here. The candlesticks are above here. They are above the moving average. As they are above the moving average here, and look at this size, they are underneath the moving average here. Meaning, as they are under here, the market is coming down. On this other side, the market is moving on upper trend. So my point now is, if the market is on upper trend, you buy, and if it is on lower trend, you sell. So why I said it is long trade is that, imagine if you enter the market somewhere around here, for instance, you buy and you leave it. This is 15-minute time frame, and it goes all the way up and it begins to reverse back. By the time it's cutting across here, you go out of the trade. Once it's cut across, you go out of the trade, then you open a sell trend. As it is coming down all the way to this place, you keep selling. It reverses back. Once it gets to this place and it's about to cut and it's cut across again, you go out of the trade. You go out of the trade of the buy, then you do of the sell rather, then you buy. Since you already sell from here or to this place, you just leave it and it keeps growing out to this way, so it enters a reversal. So the moment you cut across this moving average again, you close the trade and you buy. And as you can see, you buy and it moves all the way up again. It enters a reversal, it keeps coming, bounce back, and again it gets to this place. The moment it crosses across the candlestick, the moment the candlestick cut across the moving average again, then you go out of the trade. You go out of the trade and again you begin to sell. And as you can see, it keeps coming down. This is 15 minutes time frame. It keeps coming down, then it enters a reversal again. The moment it cuts across this moving average again, you go out of the trade and you begin to buy. That is how you go about it. You keep going about it up and down, up and down, up and down. So the beautiful thing is that, if let me look for somewhere. Okay, fine. Let me just cite this as an example. If for instance you open a buy trend here. If you open a buy trend here, you set your stop loss below this moving average. Should in case it reverse back, you set your stop loss below this moving average. Then if it doesn't reverse and it keeps growing higher and higher, then you keep making your profit until it bounces back up to this place. And the moment you notice that the next candle has cut across this moving average again, you go out of the trade and put in for a sell trade. If you put in for a sell trade, then you put your stop loss above this curve. And let me just quickly show you. This is what I'm saying. Sorry. Let me say this is one stop loss. This is another stop loss, for instance. So if you're on a sell trend, the moment you enter a sell trend from this side, you can set your stop loss here, so that even if the market reverse, you won't lose that much, because you already make a lot of your gain all the way to this point. Then you put your stop loss here and study the market if the candle is still moving upward. If otherwise, just leave it, then you keep going down. And as for this side, if you enter a buy trend here and you put your stop loss underneath here, this second arrow here, and the market reverse, the moment it gets to the stop loss, definitely it will close the market. Meanwhile, you already make your profit all the way to this place. I don't know if I'm making sense. This is for the long trade. But if it doesn't enter reversals for the buy, it keeps going up, it means you'll be making your profit. That is for long trade. That is one of the things I need to quickly explain. Then going by the second trade I said earlier, which is the short term. That one also, you need to still study market movement. You need to study the trend of the market to see when you can easily enter the market and quickly go out. And on that one, you study the spike. The moment there is spike, then you enter the market. Let's check 1 minute time frame. Fine, this is a spike here. I didn't quickly see this on time, but it's still okay. There's a spike here, and from what I'm seeing now, the market keeps spiking up due to the fact that we already have lower low. Let me go to 15 minutes, and from the way I'm seeing this moving average, it tends to face down, meaning the market wants to go down. And if you look critically, this is more or less like it's a kind of consolidating here, because it keeps going up, down, up, down, up, down, you know. But let's see, this is 15 minute time frame. Let's check for the 30 minutes. Fine, it shows that the market is moving from up and towards down now, trying to go down the trend. But to buttress that, let's check the 1 hour. Okay, from what I'm seeing, I can't really say that this will continue as uptrend. It tends to consolidate somehow at this point, and then later, if it breaks through, it will now go either downward or upward. Still consolidating. Let me see. 15 minutes, 30 minutes, 1 hour tends to look so similar. Okay, but the fact that we just have one long spike now, what I will do is that I will wait and see after like few candlesticks and see if it's going to spike again, and if it doesn't, then I will have to check again my higher time frame before I enter the market. Okay, the fact that the moving average is facing down, tending towards downtrend. I think let's just take our 5 candlestick in 1 minute time frame and leave the market. So I will open a trade for this now. I'm using $1 as my lot size. 5 candlestick and I'm out. Meanwhile, like I explained, the same thing goes for boom. This is on boom. The same thing goes for crash. Still downtrend. That's trend. Okay. Same thing goes for crash 1000. You follow the same procedure. If you are doing long trade, you follow the same procedure. You take your levels for stop loss. You take your level for stop loss, both for buy and sell. Like I mark these areas. You take your levels like that. So if for instance you enter a trade from somewhere around here and you buy, it keeps going up and up and down, it gets to this side, it gets to up to this and it begins to come down. The moment it crosses this moving average here, you go out of the market. That is if you buy. Then if you enter a market for sell again and the market keeps coming down. Meanwhile, as you enter market for sell, you put your stop loss here above the moving average in case anything wants to go wrong, so that you won't lose your money. You won't lose your money, rather. You put your stop loss above, then you sell. It comes down up to this place, down up to this place, and it begins to reverse. So if it gets to this place and it crosses the moving average again, you stop the trade and enter a buy trade. Meanwhile, the moment you buy a buy trade, you enter a buy trade, you set another stop loss underneath the moving average and it goes all the way up. If it reverses, the moment it crosses here, you stop the trade and enter a sell trade again. That is how you go about it, up and down, it crash. So the same principle goes for boom and crash. You can use this to grow your small account at any time, and that is it. Let's check our trade. So we are still on. See, with $1 lot size, I already made 2.4 in my trade. And let me check 1 minute time frame. How many candlestick is this? You can easily zoom now if you want to count your candlestick. This is 1, 2, 3. I just add 3. The fourth one is still moving. 5 candlestick maximum, you go out of the trade. And the strategy works for any zoom level. It works with any zoom level, but I prefer using second zoom level. And please be sure, make sure that your trade entry point, your trade and your entire candle trade point is underneath this dollar sign. Sorry, let me show you. Be sure that it's directly underneath this dollar sign. This dollar sign here. Let your candlestick be directly underneath it. This is what I'm saying. Underneath like this. Did you see this cross? From here like this, straight down. Don't let it exceed there, irrespective of the zoom level that you are using. Let it just be like that. That is perfect for any trade, irrespective of the zoom level, the minutes you have. Okay, let me zoom again. I think it's up to 5 now. This is 1, 2, 3, 4, 5. This is 5 candlestick already. The 6th one just emerged, so I can stop this trade. And as you can see, this is 3.8, which is cool. Like I promised, each time I'm dropping a video, I'll be trading live for you to see. I'm going out with, let me just make it 4. This is 4.0 something dollar. I'm out of the trade. Please, if you find this tutorial useful, kindly like and share, please. Kindly like and share. And for my new viewers, click on the subscribe button, press the notification bell so that you'll be notified the moment I drop another video. So that is that on how to go about the moving average. Okay, so I said I'll show you the moving average indicator I set. Let me quickly show you. Click on this F sign. As you can see on your main chart, I have this moving average. This is the moving average I set. Period 30, shift 0, method simple, apply to close. Then the style is white because I'm having the style is black because I'm having white background. The pixel could be any pixel. It's only the pixel only show the thickness of the line, so it could be any pixel. It could be 2, it could be 3, it doesn't really matter. But just screenshot this, put it on your setting, and you are good to go. Once you have done that, just click on done. If you click on done here, it will be saved. This is the done. Just click on this done and it will be saved. The other indicator that is on my screen is this fractal. You can just click on it, see the screen, then pixel 3, click on done. But for this tutorial, I don't really use the fractal. set diffractor of another trade entirely. But using this moving average method, you are good to go without diffractor. Thanks for watching once again, and I really appreciate you all if you really watched to the end. I hope you benefit from it, and if you do, please kindly like and share this video. And if you've not subscribed, kindly subscribe and press the notification bell so that you'll be notified the moment I drop another interesting and informative video. I will urge you to watch any of the two videos on your screen right now to see the step-by-step guide on how to double your account, or better still, how to multiple your profits. Till you hear from me in another fantastic video. Thank you and stay blessed.